Here we have the current stock market update from MicroStrategy Incorporated, stock ticker MSTR. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So what we're looking at here is a 2-hour price chart, which means that each candle on this time frame represents a 2-hour trading period. And the share price itself for MicroStrategy has started to pull back from these recent highs. In my view, this is actually a better situation because this makes it much easier to sort of analyze where price action is likely to be headed next. Because anytime that you're dealing with a stock that's trading in record territory, it's literally uncharted territory. I mean, there is no price history up in this region. So maybe there are ways that you can make projections about stock formations in those areas, but they tend to be less deterministic and probable in terms of their predictive and projection ability. So this is actually a better movement to the downside here, because now we can actually start to look at some retracement zones and things like that and try to get a sense of where this stock actually might be headed next. So as things currently stand, as we can see here, the stock has broken through the 23.6% Fibonacci retracement of this trending move from roughly, let's draw in the numbers here. This initial price move would have started at the lows coming in at 114.27. And then these trending moves extend all the way to those prior highs at 227.15. So really what we're looking at here is this trend wave movement in the positive direction. And now we're looking at the retracement, the pullbacks that have been seen after those highs were posted. So, right now what we're dealing with is a stock price that has fallen through the 23.6% Fibonacci retracement level. And we're also starting to spike through some prior price highs, which would now be expected to work as support. So in prior instances, this area was working as a resistance zone. We see a bit of a price failure here, and then once share prices break through that level, it would now be expected to work as a support zone. So as we can see here, we're starting to grind through that area. So that does give us information about where share prices are likely headed, because this would mean that areas of expected support are not necessarily holding up share prices. So we have actually seen an hourly close below this level, and the share price zone has broken. So the next level that I would be watching to the downside does come in right around 183.90. Let's even mark that in on the chart here. So at 183.90, we do have a confluence between the 38.2% Fibonacci retracement zone and this 50-period exponential moving average. So as you can see, both of these orange areas are sort of working in combination with one another. There's no connection between that orange color. That's just sort of a random event there, but this 50-period EMA is now coming into contact with that 38.2% retracement zone, and this does give us an area of roughly 183 as potential support. So, if we remember here, if we pull back a bit further on the price chart, we can see that this 183 area was very important previously, because this was really a sort of a triple top resistance zone. You could even possibly call this a quadruple top. It was tested several times. So this area is now a major level to watch here, because, previously, again, it's the same logic applies here. This was previously a resistance level. And now if we test it from the top side, it's expected to work as support. So that gives us two possible outcomes. We can see that share prices then bounce from that area and start to move higher and possibly post new higher highs in the process, or we break through here, and then this tells us that momentum is likely to begin accelerating in the downside direction. So those are the two scenarios. We're not really making projections here. We're seeing events occur on the price chart, and then we're reacting to those developments. So if we quickly look at the indicator reading, just to close out the video here, we can see that we're starting to lose some of that momentum, some of that positive momentum that was being seen previously. So we do have this reading in the relative strength index. This is a bullish signal here, but it's starting to break. This isn't really surprising because the slope on this momentum line here, trend line, is fairly drastic. So this isn't really a sustainable looking trend line here. Mostly what you would like to see is something, more along these lines or something like that. These types of trend lines tend to be much more stable. But if we see share prices, that are being supported by trend lines that look like this, it does become much easier to break those to the downside. So this does appear to be what's happening at the moment. The real question is whether or not share prices will continue to move lower. I would really be looking at that 183.90 area as the main level now to watch to the downside. If we do see a break below there, then it's more likely that we're going to start to see momentum that accelerates in the negative direction. We're already seeing a small indication that could be happening here, but this is still relatively short term, even in comparison to this longer term bullish trend line here, momentum reading. So this could be a downtrend here that is starting to develop. That's completely possible. We're already starting to see some lower highs there, so we could sort of move into this area a bit, and then see a price failure following that area. And then start to move lower. I mean, that is a possible outcome here. So it is important to watch for this current momentum reading because this prior uptrend here has now completed itself and run its course. It's been broken to the downside. So the only momentum reading that we have at the moment is negative. So, that doesn't mean that it can't turn positive later. But what this does tell us is that the current momentum condition is not positive. It's negative. So just quickly here, just to re-summarize, and then I'll close out the video. What we're looking at here is a prior high coming in at 227.15. This main level that I'm watching here comes in at roughly 183.90, and that is really in close proximity to this 183.80 area of resistance that we were watching previously. So this is sort of an inflection point for the stock. It's almost as if you can consider the stock to be bullish when it's above that area and then bearish when it's below that area. So that is going to be an important level here going forward. If we are able to stay above there, then there's scope for posting some newer highs. That would help us to understand that the momentum condition and the main trend is still positive. So here's the current stock market update from MicroStrategy, stock ticker MSTR. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.